Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Haynes over at the CBO. As you know, we've got you covered from exchange to exchange. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of LikeFolio. We are taking a look at Amazon today. There were a lot of analysts who said that this is the year that Amazon turns the corner and becomes a winner, because it was not a winner when it relates to the Mag 7 last year. Now, I know you've been looking across comparison in the ad space. So how does Amazon stack up now?
Well, you know, it's been, irrelevant's not the right word, but, you know, ads is not generally what you think of when it comes to Amazon revenue. I mean, it is a low margin, high volume retailer at its core that's forever been sort of subsidized by AWS, right? That's kind of the new thing that's kicking in some additional revenue. Any other company that has AWS, it's the entire business. It's a huge business, but for Amazon, it's a small subset, right? But now we can actually talk about how Amazon has this third area. It's over 10% of revenue, and that's ads. So now they're not just a one-trick pony subsidized by AWS, right? They've got three things going on, and it's actually really impressive. I mean, when you look at their ad revenue over time, you can see here it is growing significantly. In fact, their ads are up about 24% on a year-over-year basis. Up to the pace right now is $65 billion per year, and 2026, assuming this continued growth, you're looking at between $80 and $85 billion. So they're really large, obviously, and they're, you know, if you look at the total ad business, they're about twice as big as YouTube, 10 times as big as Netflix. And again, it's just a small subset of what Amazon does. But I think it's something that really needs focus, because they're able to convert at levels that you just don't normally see. I mean, normal e-commerce converts around 1.3, 1.4%. They're regularly seeing conversions in the 10 to 15%, which is insane. It's about 10x the conversion rate. So advertising on Amazon makes a lot of sense for businesses, and when it returns that kind of number, and so they're going to get more and more of that business. Now, you know, when you talk about, you know, what's happening, I mean, they're investing a lot into this space. Just at the Consumer Electronics Show, they talked a lot about different things that they're doing with their Fire TV. You know, they're adding a checkout feature where you can do it by voice. It's 30% faster. So if you see an ad you like, you can just say, "Hey, I want to buy that," or "Show me more info," and you can check out without missing what you're watching. They also got the ability to, have the advertisers bid on the attention spikes of live events. You can think about, like, you know, when you're getting down to the last 2 minutes of a football game, those ads are more valuable than, you know, the ones in the middle of the first half. So people are going to pay more, and there's live bidding going on. They're also introducing agentic ad operators. And so they're doing a lot of things to make their ads better, but already they're doing very well. And so this is just another reason that, I don't know if you guys know this, but LikeFolio has three assets that we believe are what we call infinite holds, and it is Bitcoin, Tesla, and Amazon. And this is just another reason that we think, you know, for the rest of the lifetime of everyone watching, you can buy shares of this company, throw it into a vault, and you'll be good to go, because there's just no competing with this company. And now they're adding, right? I mean, this just on the web alone, there's no competing with them. But then you've got AWS, which is plus 20% year over year. You've got the ads, which is plus 24% year over year. I mean, this is just a killer company that no one's really going to be able to catch, and they're demonstrating why.
Landon, this is why we're talking about digital advertising today, because much like Google Alphabet in cloud, they were a small player that's growing exponentially and starting to catch up to Azure and AWS. But the opposite is for digital advertising. Amazon is at the beginning of their life when it comes to digital advertising, and they are growing like a weed. You put up the numbers. 2024 was $56 billion. This year is going to be a lot more than that, and the expectations for 26 only going to get bigger. So this has become a real business for them. And as they get Prime Video more with more live sports, it's just going to become more and more. And I agree with everything you're saying, Landon, in terms of I use Amazon for shopping, for AWS, more than I've ever used it before. It only gets a bigger footprint in people's lives, and their distribution centers get you things so fast but their ability to advertise now, it's just another bucket for them. And this is a higher margin. Remember, AWS was their high margin grower, right? Now, that is still a high margin grower, but this is another high margin business for them to get into to help out with their low margin business, which is retail. So what do you think the key is? Is this just a business that's just going to keep growing and growing, much like the cloud, much like a lot of these other firms? It's just a growth behemoth, Landon.
Yeah, I think the key with Amazon is that they are masters, absolute masters of execution. I mean, when you look at what they started as, I mean, if you can remember, you could buy books online back in whatever it was, 98 or something like that. And they became a web retailer, and there was a lot of web retailers, but they did it better than everyone else. They cracked the code. Then they got into AWS, mostly to service themselves because they were tired of poor service and expensive service from other hosters. So they said, well, you know what, let's just build it ourselves. They made it so great that they said, this is a business. Let's sell this to other people. So again, execution. Now we're back into another execution framework, and that is the advertising model. And so they're executing better than a lot of their competition. Even though that they're new to this, it seems like whatever they get into, they do it really well. And I'll be the first to admit that Amazon Prime TV is not the major player right now. It's not number one, but it's executing well. It's growing. They've got about 315 million monthly active users. They're starting to, I think they've got Thursday night football that they have going on. They're trying to get into live sports. They're figuring it out. And, just to kind of illustrate how they prefer to execute what the consumer wants, they allow users to buy ads on Netflix and Disney and Roku through their platform, even though the user won't be ending up watching it. It's going to benefit the business that goes through that. So that's just another kind of example of how, our customers want this, even though it's maybe not us providing, they're going to advertise on something else, but let's give them that ability. Maybe we can take a small piece, but it makes their life easier. Side note, that's, that kind of move was bad for the Trade Desk, TTD. That's one that we've been bullish on. They've not been doing well. And I think this is one of those reasons is everybody's starting to figure out other ways. But I don't want to digress too much. But just overall, I mean, it's just execution. That's what they do. And so, if you're in the ad game business and you hear, 2 or 3 years ago that Amazon's going to start getting into the ad game business, you might be worried, and rightfully so. That chart, they're small compared to Google and the other. But when you look at the growth and you see, okay, they're actually becoming very relevant. They're going to start taking more and more of this growing pie. It's a concern, and for investors, it's just another potential win. I mean, if you're holding Amazon and you just had the e-commerce business, that'd be great. You do really well. Throw in AWS, wonderful bonus, right? Now you're getting ads as well as another revenue angle, even better. So you can see here, I mean, the orange part, Amazon, is not that big, but look what it used to be, right? It is continuing to grow, and that percentage is continuing to increase. While the red boxes are not getting that much bigger, that much faster, neither are Meta, Facebook. They're not compared to the growth rate of Amazon. So they're going to split that up. Again, the pie's growing, so everybody can win, but it's just showing you that they're able to convert at higher rates. They're able to convert. Their margins are much higher, and they're just executing extremely well. So again, it comes back to execution. It's a fantastic company to own.
So let me ask you this, because you said this is one of those where you throw in a ball. I want to go back to your chart of the web visits versus the stock price. So web visits are up, and they seem to be leading where the stock price is. How should we interpret that as a signal? Is it about like buying behavior, and that could we see some appreciation in the stock price beyond what we've seen already this year? What's your thought?
Sure, yeah. So that blue line is the consumer interest with purchase intent, web visits, all of that combined. And you can see, obviously, it's seasonal. I mean, people are going during the holiday season more to Amazon.com. But what's interesting is we're now higher than we were a year ago. So this is a higher high, and it had a lower low as well. And so, the stock is doing well. It's not at all-time highs, but it's doing well. But this web data, this consumer purchase intent data is at all-time highs, and it's higher than it was last year. And so I think it's at plus 3% on a year-over-year basis, which doesn't sound like a lot. But you got to remember, this is the leader. Everybody goes to Amazon all the time. So to grow 3% year over year is very strong. again, add in the other two businesses kicking in a ton of revenue and profit. I think it's a great opportunity to buy sort of, I don't know if I'd say buy on a dip. It's not down that much, but it's not at all-time highs where I think it probably should be, because everything's firing on all cylinders right now, including, again, the web up 3% for people buying as from the retailing side of things. So just overall, I think very strong opportunity in Amazon for anyone to buy it, throw it in a vault, never think about it, and check it back in 10, 20 years, and you'll be pretty happy, I think.
Landon, and by the way, kudos to LikeFolio. Your advertising giant comparison, those are the three names we're looking at today. So for our viewers watching, you see what we were talking about exactly, which is they're a small share of advertising compared to Google and compared to Meta, but they are growing like a weed, and they are gaining market share each time. You see how they're doing better. It's actually quite amazing, and those are the three names we're looking at today. So it's really interesting. I appreciate you coming on to talk about that and give us these clear pictures of, if you're making a long-term look at Amazon, they're a small piece of advertising, and they keep getting bigger, Landon.
Absolutely. Thank you very much. I agree. But, across all three of those companies, I think they're all very strong. We could talk about them. We have. They're all doing really well. Google's like fighting off the AI battle. They're turning it into an opportunity. Meta is turning the massive number of users into revenue at incredible rates. So they're all three winning in different ways. But it's just interesting to see that Amazon is entering this picture, competing against those two ad giants. When you normally think of them as a retailer and sort of this ad services provider, but now it's like ads too. Geez, this company seems to do it all. But again, it comes down to incredible execution at the top.
All right, Landon, thank you. That is Landon Swan, co-founder of LikeFolio. All right, Kevin, this is the